Hello, everybody. Today, I'm going to do the analysis and recommendation of JB Hi-Fi investment. Firstly, I will do the introduction. The presentation aims to analyze the company named JB Hi-Fi Limited. So, firstly, the JB Hi-Fi is a company and is listed on the Australia Securities Exchange. Secondly, I will introduce the background information of this company and well-known business. Analyze the strengths and opportunities, weaknesses, and threats of the JB Hi-Fi Limited will put after we will finish do the background information. I will also provide the dates of performance and operational analysis. Finally, the investment recommendation I will put on the last page. Let's move on. This is the background information. Firstly, JB Hi-Fi Limited is a retailer of home consumer products, including electronics, appliances, white goods, and home entertainment devices. Second, the products have a more significant various types of electronics, such as televisions, computers, cooling products, and cameras. On the other hand, they also have some cooking products. The JB Hi-Fi Limited also offers software, music, movies, and games. Additionally, the company also services the commercial information technology and consulting services. About the segmentation, the company segmentation is in Australia and New Zealand. The company sells goods and products under two brand names, JB Hi-Fi and The Good Guys. So I will say a little bit information about Good Guys. Good Guys is an electronic company that has been acquired by the JB Hi-Fi Limited on 13th September 2016 from the USA. The dial value of the Good Guys is $655.08 million US. Then finally, JB Hi-Fi also planned to acquire the River J car on 4th April 2022. We are continue to do the company analysis. We use the SWOT method to do the analysis. So the first we are to say some very basic information. The dominant market is Australia. The JB Hi-Fi Limited also has some competitors such as Kogan, Harvey Norman, and Red Barber companies. The most significant number of substantial stores are in New Zealand and Australia. Finally, I will analyze the risk of JB Hi-Fi Limited. The risk also will appear in the daily working life of this company, such as intense competition and foreign exchange risk. First, we are focus on the strengths, also the competitive advantages. Firstly, the JB Hi-Fi Limited has a wide range of operational networks. The company services a chain of home consumer products and provides a broader scope of electronics products platforms for selling products. In 2021, the JB Hi-Fi will also provide services and products online depending on the perfect experience of online experiences. Secondly, JB Hi-Fi Limited has a higher inventory turnover ratio than other companies in this industry. In 2021, JB Hi-Fi reported an inventory turnover ratio of 8.3. It was so higher than the turnover ratio of Harvey Norman of 3.9. A higher turnover ratio represents a lower stock cost and uses more funds to improve operational performance. We can look at this statistic. This is also the finally advantages we will see in this period. The financial performance is very improved. We can look a very significant increasing trend. So the higher return, the increased trend means the company will give the higher return to existing shareholders and attract further investors. The gross revenue and profitability can help company allocate fund and expectation. So we can looking at the total revenue and net margin. So the net margin also have increased between 2020 and 2021. So on the other hand, it's reported net margin of 5.7% compared to a net margin of 3.8% in 2020. So this also a increasing trend of net margin. Next we do the analysis of opportunities. Firstly, they have many consumers in the Australia electronics retail market. The company has a broad scope of electronic products, so they can provide a more significant number of products to satisfy consumer needs. The company can also benefit from this market, especially the communication equipment, which has accounted for 56% of the total market value. We can look at this chart of JB Hi-Fi Limited online sales. The company stands to benefit from the Australia online retail market. The online retail sector of our company is forecast to reach US dollars about 24,572.2 billion in 2023. Finally, the company could benefit from the online retail market and improve sales through JB Hi-Fi and the Good Guys website. Finally, the final opportunities for the JB Hi-Fi is the company also can sell the game software into Australia game software market. So there is a green trend in demand in the Australia game software market because the development of 5G technology more is very common in the world. So Australia market also provides this technology to help the game software and another media. So the JB Hi-Fi provides game software and offer service very fast. Finally, the threats and risk. Firstly, the company faced a very intense competitive market environment. JB Hi-Fi Limited is an electronics retail market. The company has a lot of physical stores and need to consider how to manage these stores. The company needs to face two types of pressure from competitors, such as in the retail industry like Woolworths Group Limited. On the other hand, the company also faces competitive pressure from the same industry, such as Harvey Norman Holding Limited. This limited is our main competitors in the industry. Secondly, the foreign exchange risk is prevalent if the company opens the store overseas. So the accounting receivable may not be the same as the report receivable because of the exchange rate fluctuation. Finally, system failures are widespread internal errors on the internet and computer system, especially in companies like JB Hi-Fi, like Harvey Norman, like this, which depends on the internet and system services. Some system failures cannot be avoided because professional computer engineers cannot change them out. We are moving on to current environment consideration. Firstly, the drop in foot traffic in brick and mortar stores are drawing the COVID-19 pandemic has also led to the closure of some brick and mortar stores. Secondly, by contrast, there has less impact on the online platform of JB Hi-Fi. Also, there has been an increasing sales trend through both media and the website. Thirdly, the operational risk had less impact on the JB Hi-Fi Limited because the company has a health diversification in functional. Finally, we can see this is the share price change of JB Hi-Fi Limited. The share price has decreased to $44.64 at the end of 2021. In 2022, the share price has a top price of about 56.85 on 30th March 2022. the share price increased to 51.93 on 7th April 2022 and moved to keep stable. Now we are going to the valuation outcomes, and we are do the valuation decision making. Firstly, we use two methods to do the valuations. The first one is valuation method multiples, and the another one is discount dividend model. So with two methods, finally, the range of these two models outcomes is between 25.25 Australian dollars and 159.02 Australian dollars. The average valuation is 85.664 Australian dollars, and the midpoint valuation is 72.64 Australian dollars. So the current share price is 49.73 Australian dollars within the intrinsic valuation range, but the average valuation outcome and the midpoint valuation outcome are higher than the current price. So the current price appears to be undervalued based on these two outcomes. Finally, the overall recommendation. So firstly, the competitive advantages of JB Hi-Fi come from the operational network, high inventory turnover, and financial platforms. They have more opportunities in the Australian electronics retail market, and on the other hand, the company has advantages in marketing, software, and provide system services. Thirdly, these two parts are from the risk. The potential risk may appear in the future, but in the company also have a specific strategy to face it. The company operates online, and the impacts of new corona epidemic on the company is minimal, and the various event evidence show that the new corona epidemic did not affect sales. Next page, this is about valuation outcomes. Intrinsic value suggests that company is undervalued by 22.91 Australian dollars and 35.91 Australian dollars. So the overall recommendation would be hold or buy at the current price. Okay, thanks for listening. And this is the references.